Hey guys, I'm back for another video for the banking services sector. So let's begin, jump right into it. First stock up that we have is ticker symbol MTB, M&T Bank Corporation. Stock is at $122.20. Market cap is at 20 billion. Again, today is June 20th, it is 5:20 p.m. and markets are closed. So again, by Wall Street standards, market cap is respected by Wall Street. 52-week high and low. Pretty good range. Earnings per share is at, 12.91, but close to 13. The price to book is under 1, so pretty cheap value. Definitely under 3, so that's really good. Dividend, wow, is at $5.20. Dividend yielding is not bad, actually, at 4.26. So let's see why they are paying so high. Let's look at the 5-year. It is below its 5-year trend. And we're going to look at the whole last year. So it looks like it's on a downtrend. Now, for the analysis and the quant ratings we have here, the highest rating that we have is income. I'd like to rate that a little bit higher. The overall rating for the quant is 3 out of 5. The charting, again, it looks okay, but it needs some work. I'd like to see it closer to the 200 EMA, but since it's not, I guess it's cheaper than what it usually costs. So it's actually at a good deal. Now, since the information being presented to me is only quarterly, I'd like to do this for annually. It must have been frozen, so we'll jump into the history for the income. So let's see what they have for income. These numbers are actually pretty good. For 2020, I just want to start with 2020 because that was a rough year. So they paid $1.10. In 2021, that was actually the same, but the last payment in 2021 was at $1.20. And so it looks like the end of the year they gave that raise. So continuing on to 2022, next 4 payments were still at 1.2 all the way through. And even in November 2022, they still paid 1.2. So to continue on to 2023, they paid $1.30. So that was actually a raise. That was somewhat of a delay. So that was an extra quarter. Not quarter as in cents, I mean quarter as in months. So that was a delay in time for it to give it the dividend raise. But again, I think that was well worth it for a 10-cent raise. A 10-cent raise is very, very rare and very, very good. Not by Wall Street standards, but by my standards, because I do specialize in income portfolios. So a 10-cent raise is like extremely well. It's really, really good. So I want to see if they had some splits. Okay, so they had a 10-for-1 in the year 2000. So that was like 25 years ago. Well, 23 to be exact. So that's not much to worry about. Again, it was only one split, and it doesn't seem like a bad habit or a bad consistency. It only happened one time. Maybe they need to raise some money. I'm sure it's for good reason. And yeah, it seems like they are doing well. I want to close this up and open it up again. I apologize. I'm not getting my annual numbers, so I just want to reopen this, and that way we can see uh, the numbers. So it looks like for Q2 all the way to from Q2 2022 to Q2 to 2023, these are the numbers that I have. It looks like from Q2 2022 they raised their guidance by a lot. They were estimating about $2, and then they upgraded that for the next quarter to an extra $1.50, which is huge. So from $2 in one quarter, they want to raise it to $3 and pretty much 50 cents to have that guidance, see if they can earn that much for that next quarter. And it looks like they just missed it. And then it's pretty much flat from here on out. So Q4, they actually beat their target. And in Q1, they met their target. For Q2 2023, they are expecting $4 and close to 40 cents. And the earnings release date will be somewhere around mid-July. Now, looking at annual numbers, ROA is pretty bad. ROE is okay. Their earnings is where it's at. They're earning really, really good. I've never heard of this company. They must have a very strong business model or plenty of locations, or must be doing business really well and expanding every few years. And I can tell just by the numbers and their earnings, they're doing really, really good. Doesn't seem like this company is doing bad at all. Net margins are pretty good too. Their debt is lower than their peers. Usually I see them in the 90s. These are like in the mid to high 80s, as you can see here. Net income, it's about the same. So I'm sure their revenue has been going up year to year, slightly up. So, okay, it makes sense. And even though they had typically most stocks had a down year in 2022, they had a big increase of 36% in 2022. Cash flow, this is where the critical moment happens. This is the do or die moment. I'd like to see them positive, but we'll see right now. So it looks like about 20 billion. So not bad actually. It looks like they're actually breaking even on their cash flow. So I take that as a win. I don't really take that as a loss. If I had to decide win or lose, you can't really say, oh, undecided decision. If you had to say yes or no, let's do the math. So 4.57, 4.57, 4.5 plus 4.57. So we're looking at 21.17 billion. 21. Wow. So they have about 170 million in cash flow. I'm trying to do the math. Yeah, so 170 million positive in cash flow. That is not much, but since it's positive, we'll take that. And then I'm sure they're using that for their dividends, adding on to their net income as well. That was close to 2 billion. So this company's doing pretty good. Let me look at that chart again. Okay, now I actually want to see what they're ranked. This company is actually solid all the way around. And I mean, for the long term, short term, it's good for income. All the numbers are good. Uh, it doesn't seem like they're slowing down. Their estimates have been upgraded, ever since Q3 of like last year, and they're holding that number pretty good. Now I want to see. Actually, I don't really look at this. I rarely look at this, but I want to see how are they comparing against their peers. They're at 12. So, let me see. MNT. So the MNT. So they're actually ranked as number 24. I'm sure these rankings might be a little off. Like it's somewhat accurate. It's not too accurate. It's just a little nuts. But I want to compare them to other banks with a better, stronger market cap, because that's more of an even playing field. It's like you can't. I mean, you might earn a little bit less, but the companies are in different levels of their status. So you can't compare a minor leaguer versus a major leaguer. You have like somebody in the minor leagues. Yeah, they're still practicing. They might, be introduced into a major league game, maybe 1 or 2 games, get some experience under their belt, and then all of a sudden, they're getting better, slowly gaining their exposure out of the minor leagues, into the mid leagues. They don't call it the mid leagues, but it's like moving into the mid caps, and then from there, they try to throw you on the bench, and that when you're in the on the bench squad, it's actually a good thing, because you had some experience, and now they're just trying to throw you in there, So then they use you while they can, but then they don't want to overuse you because they want to save you because of injuries. So in a way, it's kind of good to be in the middle. It sucks to use the word middleman, but sometimes they can be a really good use. But yeah, the only downside is, people might not like you, and then you might not be used as much. So, anyways, overall, I want to compare this stock to like a stronger market cap bank. I think I'll do that later on. I'll do a versus or a competition video versus this stock in the banking sector, because it really looks pretty good and unheard of. So MTB, I would say yes, definitely yes to watch list. And we're gonna move on to the next one, FCNCA. We have here this major uptrend. So we went from, this is nuts. This is nuts. We have FCNCA, First Citizens Bank shares. Market cap is at 18 billion. Share price is at over $1,200. I don't know why somebody would pay $1,200 for a stock, for a bank stock. Even then, I'd rather pay that much money for something else. We have our earnings per share at 700. These are just weird numbers. Price to book is under 1. So that's telling me it's undervalued. But again, it's just weird. 52-week high and low. These are explosive numbers. Volume is really low. So Wall Street is really not taking a look at this stock. Let's look at the max chart. So look how extended this is. This is nuts. This doesn't even seem like a bank stock. This seems like one of those rare stocks that people just want to jump in just to make money. So in 2022 of March, it was worth Let's jump into 2020. So it was worth around $400. Then it gained in 2021. Then it dropped. That would have been a perfect move. Uh, I like this stock so far just because for a day trade. So if this stock ever goes down again below the 200 EMA, you would have bought like right there as soon as it goes under the 200 EMA. And this is long term. If you would have went all in any time below that, which was in March, if I would have knew this about this stock earlier, I would have added it to my watch list. Definitely would have went all in, and then $560 would have doubled your money in April, and then it would have continued all the way until June, and that actually trend is still continuing. There's no further confirmation. If it drops down, I don't think it'll drop much. But very few people are in this stock, and this is almost one of those secret bonus stocks that nobody talks about. So there you have it. In the shorter video, I'm definitely gonna recommend this one. I'm sure you guys are gonna like this. So yeah. Moving on to the analysis. So quant ratings, we have here growth. I don't believe in growth for bank stocks. I think momentum is where it's at. I think they got these in reverse. I think the growth they talking about is momentum. So the highest rating that they have is growth. Again, I disagree with that. I think the momentum is where it's at. This is definitely a good day trading stock. For the long term, no. So that is what it's good for. Let's look at some numbers out of curiosity. These are insane numbers. I mean, I'm sure Wall Street doesn't care about the earnings. They always like those stocks every once in a while where you can make money on. The earnings are actually pretty strong year to year. Their margins have gone down slightly in 2022. 91%. So it's typical. Book value has gone up. Income statement has gone insane in 2022. I don't know why. So revenue must kept up as well. Yep, that's what I expected for it to be like over 100%. So we have here from 2 billion. Yeah, it would have to double at least to at least 4 billion. So we went from close to 2 billion to 5 billion. Their balance sheet so let's see what their cash flow is. 2.7 billion. So they're cash flow positive. They can afford the dividend. Again, I've never heard of this stock. Let's see what they're made of. So they're giving pretty big raises, but they're very delayed. So looking on from 2020 all the way to 2021, we have here 40 cents, 47 cents, and the continuation into 2022 was 47 cents, and the last payment in 2022 was actually 75 cents. So they're continuing that trend to pay off 75 cents. Again, if you look at 2020, so we have a really good raise. So from 40 cents to 47, that's a nice increase. And then the next increase was at least a 25 cents increase. I don't look at percentages. I look at whole numbers. So to be exact, 28 cents. That's a really tremendous, insane raise, which is really good. It's just a matter of sustainability and consistency. Pretty much can it hold up based on the numbers being provided. So again, yes, it looks like they can sustain and be consistent with these payments. Again, this looks like a really good chart just to day trade. But you have to be like very accurate and aware. Like you have to have this on an alert where it goes below the 200 EMA, and then you see it bounces back into that. So there you have it. We're going to move on to the next one. So yes for this one, the definite yes. Last one up is OCFC. OCFC. $16.22, 52-week high and a low. Decent range. We have volume pretty decent. Market cap close to $1 billion, almost respected. 80 cents for the dividend. Earnings per share is at 2.45. It's okay. Could be better. Dividend yield is close to 5. So looking at the 5-year chart, it's still below its 200 EMA. You see his long legs down, slightly go up, but see these long legs down. I don't really like the chart. I don't see it going on an uptrend. Again, the stock beforehand was a much better play to get into. So moving into the analysis for the quants, highest rating we have is value. Obviously, it's giving it cheap price, and the growth is at 7.77, 777. I don't see any growth in this stock, but again, I could be wrong. It is what it is. Overall rating, they give it a 5. I don't see how, but anyhow, we're gonna look at the annual numbers here. We have here some mixed estimates and actual results. In Q2 2022, they missed. They started to slightly do upgrades and then started downgrading after Q1 for 2023. Q3, they beat their estimates. In Q4, they obliterated their estimates by a long shot. So I'm sure that must have sent the stock going up. If not, then oh well, good luck to them. Maybe because of the banking sector was awful at that time anyway. I sure knew it was awful anyway. Then they downgraded and missed estimates, and they're slightly starting to lower their guidance. Moving on to the key indicators, we have here annual numbers. We have 2022 numbers. So 9%, 1%. These are crappy numbers. Net margins are still pretty good. Debt compared to their peers, slightly better than normal. So we have decent numbers. Now on to the critical point here, which is the cash flow. 250, 132, so 1 billion. And it looks like they are negative cash flow at about 70 million negative in cash flow, which is not much. To them. They're pretty much breaking even. Can you use, so they can use pretty much half of their net income, but that's usually not a good idea. This company will survive, I think, but again, it's not recommended to even add this stock to the watch list. So that's all I have for you guys. Really, I caught a big fish here. Well, we did, since whoever's watching this video, hopefully you can see this. I know you see this in the shorter videos. So yeah, I'm sure everybody's going to be very excited for this stock. So definitely none of these stocks. So no MTB, no OCFC, and yes to FCNCA. That's all I have for you guys. I got 2 more videos for you guys. Thank you guys for watching, and I'll see you guys again.